A report by the Insurance Regulatory Authority on the second quarter industry statistics indicates that the insurance premiums went up by 19% to 144.02 billion shillings mark compared to the 121.04 billion realized a year before. Now, the data by the regulator indicates that general insurance was still the largest contributor to the industry insurance premiums, taking 59.3% of the total premiums at 85.36 billion, with the long-term insurance premiums coming at 56.66 billion in the period under review. General insurance business and writing results reduced significantly from a marginal profit of 62.45 million in a quarter two of 2020 to a loss of 1.46 billion in quarter two of 2021, attributed to a high increase in loan ratios due to relaxation of restrictions that have been imposed on the travel due to COVID-19 pandemic. Losses in the general insurance business rose to 32.38 billion, a 15% increase from the 28.08 billion reported in the second quarter of the previous year. Now, the report also indicated that claims paid increased by 16.9% to 30.6 billion compared to 26.17 billion in quarter two 2020, with the medical, motor, private and commercial segments accounting for the highest amounts of paid claims at 39.3%, 26.9% and 21.5% respectively of the total industry claims under general insurance business. Now, UAP Insurance maintained the market lead under the general insurance at 8.6% market share. CIC General Insurance and GA Insurance came second and third at 8% and 7.7% respectively. Now, that is a report that we have around quarter two performance for 2020, and that's according to the regulator, that's IRA on that. Now, let's look at that, Josh. They're saying that insurance premiums have hit 144 billion in a quarter two of 2021. Would you say that this increase in claims is an indicator that the effects of the COVID-19 pandemic are still being felt in the industry, albeit that little correction in premiums?
Yeah, for sure. I mean, obviously the insurance industry was bound to be one of the hardest hit sectors from COVID-19.
Yes.
I mean, the expected correction was that because what the pandemic does is it makes us alive to our mortality, is that then it would increase the uptake of insurance, and therefore premiums would have gone up, at least much higher than we see them going up. I think what the industry lost was an opportunity to do a lot of PR, to do a lot of marketing, to bring a lot of, to increase the penetration of and COVID-19 really presented that opportunity, but I think it was missed to a large extent, unfortunately.
All right, so let's look at another area that is a talking point. They're also saying that the report also indicated that claims paid increased by 16.9% to 30.6 billion compared to 26.17 billion in quarter two of 2020. Now, these are the areas where it came in, with medical, motor private and motor commercial segments accounting for the largest amounts of paid claims at 39.3%, 26.9% and 21.5% respectively. Those claims have jumped again, Josh. Again, talking about how we're still right within the COVID-19 pandemic, or these are the ones that insurance companies could not be able to pay back in 2020?
I think in terms of health, I think it really has a lot to do with COVID-19. When it comes to motor, private and commercial motor,
yes,
I think the numbers just don't make sense for me there, because remember, with restriction of travel means less travel, with curfew means people are driving at night less, so you have less drunk driving. So I would have expected that at least motor and private, both commercial and private, should have gone down. So perhaps, as you mentioned, that might be a residual, payment from 2020 and before that is being included in these numbers, because it just doesn't make sense. With restriction of movement, you should see fewer accidents, and we have seen fewer accidents.
Yes. All right, let's talk about another area that is always a concern, especially when it comes to insurance in the country. I mean, in the last 5 years, the life insurance market in Kenya has experienced growth in both level of direct premiums as well as in equity. I mean, when we're talking about even the general penetration of insurance in the country, Josh, for you, from what you said this morning, what do you think is the biggest undoing? Because again, we cleared 2020 with it just being at 2.4%. It's quite a unique number, or a disappointing number, if I may not have the best word to describe it, for the sixth largest economy in Africa.
I think disappointing is an apt word. I couldn't put it better myself. And you're right. But I think the issue also is, I mean, the insurance industry has a lot of PR baggage. People don't really believe you'll get paid, and we have all these stories of it taking so long for people to get paid. We have issues of brokers not remitting premiums to the insurers, and then so when you put in your claim, you're told you weren't insured in the first place. So there's that PR baggage, but there's also an insurance literacy issue, and that is why I was saying, if ever there was a point at which the insurance industry in Kenya should have taken off, then it is against this backdrop of COVID. Because what COVID has done is that collectively it has reminded us of our mortality. Because without a pandemic, we never think of our mortality as collectively as we have now. Everyone thinks about it separately. Either you lose a relative and then you realize perhaps health insurance is important, or you fall sick and then you realize this is important, or your car is in an accident and you say perhaps I need to increase my premiums. But for once, we were collectively concerned about the future. We were collectively concerned about our mortality. We were collectively concerned about our health. So the insurance sector really should have taken advantage of that. And they say challenges are opportunities turned inside out.
Yes.
And I think there was a major failure on that. And clearly we are seriously underinsured as a country compared to the size of our economy.
Pretty much. So let's clear it like this then. I mean, if you look at how the industry has responded to those challenges that we're talking about, I mean, the biggest one could be premium undercutting, fraud, and regional regulation. Do you think that indeed this industry has responded well to those challenges?
I'll take you back to a conversation we had with two industry players a couple of I think it was a couple of months ago.
Yes.
And according to them, they have done a lot. So here's how I'll sum it up. Either they have responded appropriately and are not communicating the response, or are not demonstrating the response appropriately, which then again becomes a PR issue, or they have not responded appropriately. As a layman, I'd like to think the latter makes more sense for me, because if indeed, as we had, because I think we had a broker and an insurer in the panel.
Yes.
And they seemed to give, pretty credible evidence as to what they're doing and what they've done. But I think there is a failure to communicate that to the public. There's a failure to communicate that to me, for example, as a potential buyer of insurance. So it's one of two things. Either nothing is being done, or if something is being done, then it's not being communicated and demonstrated appropriately.
Josh, thank you very much for being a part and parcel of our broadcast here this morning on Metropole Television.
Thank you.
Always, man. All right, that's exactly what we had for you this morning. Now you do know. Good morning.